It's Market Day Report. Thanks for joining us here as we work our way through another trading session. Corn market is back in the red. And what is kind of interesting about this, the December has popped up higher at 422 and 3/4. It's up 3/4 of a penny, but the deferreds are all lower in a market that's down 8% year to date. We've had a pretty good run, though, over the last month, gaining 6%. Now, we've seen 2% month-over-month gains in this market. The bean market, we're off our lows of the session, now 10.26 1/4. It's down 3 1/4 cents, but the trade range here is almost a dime. Maybe soy meal can give us something to talk about. Well, we are moving in higher territory here. And then we have bean oil. Bean oil has closed higher for the last 3 sessions. Though we're lower across the board, we've got everything above the 50-cent level. Wheat market, well, we're up 4 cents, 5.11 1/4, and that's Chicago. We call this one Kansas City or hard red, 4.94 1/4. It's a penny higher. Spring wheat, we're higher across the board. And in New York, cotton futures, 10 points higher, 65.01. Ted Seifried's with Zaner Ag Hedge. Ted, I have tried to think of anything in the world to throw at you today, but unfortunately, I've got exactly what the markets are giving us. Nothing, right?
Yeah, I mean, we're kind of lacking some direction right now, Tony, and a big part of that is a lack of our typical USDA data that comes in the form of export sales, which we did not see here today. It comes in the form of an October WASDE report, which we are not going to see, and that's a big one, right? Yeah, I mean, we're kind of looking for that direction now. From a technical standpoint, when we're lacking for fundamental inputs, we look at technicals, Tony. And from a technical standpoint, you've got both corn and soybeans challenging their 100-day moving averages and sort of threatening a breakout to the upside. And I do wonder if a lot of that has to do with the lack of USDA data, right? For corn, obviously there's a yield debate that is raging about, hey, dry finish, rust and disease issues. The yield's going to be a lot lower than what the USDA is saying. That's conflicting with some reports that, hey, guys are actually seeing some really good yields. So that debate continues without any sort of resolution or guidance from the USDA. And I think that's maybe a good thing for markets right now because, uncertainty is generally a bad thing for markets. However, this is an uncertainty about production and an uncertainty about yields. It leaves you the whole Schrodinger's cat thing, right? The box, we don't know what's in the box. There exists multiple things in that box potentially until we open the box, right? So the yield estimates of 176 or something like that. I mean, that's wild, but that exists because we can't open the box, right? The 186 though also has to exist at the same time. And when we watch social media, Twitter, the Facebook, things like that, we're going to see more of the bad than I think the good. So it keeps your speculators really wary of really trying to push the short side, I think, at the moment. So I think this is a time frame where we can find a little bit of strength, maybe counter seasonal or counter harvest strength right now. And again, I think that's beneficial in the short term for corn prices and maybe for bean prices as well. Long term, I'm not so sure because if we do get shocked in January with yields that are better than those worst case scenario ones, we're going to have to digest that at some point. We're also going to have to digest that extra 207 million bushels that we saw in quarterly grain stocks for corn that at the moment just seems out of sight, out of mind.
And we'll have a hard time finding some place domestically to use that if we're relying on livestock because we're dealing with, tight cattle numbers. So let's put a pin in this. We'll come back in just a moment. Pick up the conversation on the protein side. Market Day Report continues in a moment. We're still waiting for cash cattle to develop, but before that, what are we watching in the markets? Well, let's go to fat cattle right now, and we call them fat cattle, but live cattle is what it says there on the listing. Fat cattle is what they were referred to for years. December at 239.67, 80 higher there. What about feeders? Feeders trying to move higher as well, up 355 on that January contract and $3.50 higher on November at 372.27. Hog market it's been lower this week, down 2 consecutive sessions, and we're lower again today. Let's go back to Chicago. Ted Seifried, Zaner Ag Hedge. Ted, what are you finding here?
Well, Tony, we call them fat cattle because what they are is fed cattle, and we're hoping by the time we're taking them into the market, they're nice and plump and got a lot of meat on them. So yeah, the fat cattle and the feeder cattle. And now it's interesting because that leads me into the whole look, making new highs by a fair amount here in the feeder cattle complex or feeder cattle market. But the cattle, while they are following higher, are still a ways away from making those highs. And so what does that relationship say? To use another term or cliche, I guess, that we always threw around in the pit, which was the feeders are the leaders. And again, the feeders making new contract highs suggests that live cattle, fat cattle, fed cattle will follow along and eventually make new highs. But they've been slow in doing that. So what is that ultimately telling us? It does say that further on down the line, we are a little bit concerned about what our domestic demand might be. Is it going to hold up into the winter months, into the holiday season at these higher prices? Is it going to contend? High beef prices going to contend with our holiday shopping, or are people gonna look for ways to kind of cut back on some other expenses so that they can do nice things for their kids and family members? So there's an interesting relationship that we're seeing right now. The feeders are leading the way, fat cattle are following, but not to the extent to where we've ventured into new high territory. So that's a dynamic that needs to continue to be watched. And I would say if I were one of the funds or one of the large speculators, that I'd be expecting cattle to come and make new highs here pretty soon. And if they don't, that would maybe trigger me to rethink my long position for the moment.
Yeah, good points there. And, speaking of highs, let's bounce over here to our equities. And the Dow has gained 10% year to date. We're a little lower on the Dow Mini Futures. We've got the NASDAQ here trading in the red. NASDAQ has gained 19% year to date, and then a 15% year to date gain for the S&P. Ted Seifried with Zaner Ag Hedge. Ted, we'll see you again soon.